Hey, what's going on, YouTube? Today is day number 16 of the $1,000 account challenge, and today we are up $50 in the account, or 2.91% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000. I'm trading my system only to see how far I can grow this account by day trading options. I started with $1,000 16 days ago. We are now up to $1,791 in the account, and the next goal here is going to be $2,000. I'm looking to double this account, though I'm not going to press it. You see my gains here are fairly minimal. That's because we're just coming back from the holiday period, and I'm still taking it easy. I'm still staying size down. I'm still trying to mitigate risk. Today I took 3 trades, and in this video I'm going to break down those 3 trades. One of them was a losing trade, but I was still green on the day. So what happened? We're going to start off on the day trade watch list. Today we had Amazon as a long idea above $150 and a short idea below 148.5. So we'll go to the chart for Amazon. I'm going to move this to the 1-minute time frame. Here is your break above 150 shortly after the open. Now, I don't trade in the first 5 minutes, and I'm definitely not chasing this move up. So what I like to do is let this run without me and then wait for the pullback. We get the pullback, perfect pullback, in fact, to $150 right here, and I do take my entry closer to the bottom of this candle, and I'm immediately green. Now, what I did not want to see was this dip down lower or fully retrace this move. So I set a very tight stop loss just below my entry point. And in fact, this was an alert day, a text alert day. So I have the time-stamped alerts for you. I said Amazon going red to green, right? That's a day trading strategy. Let's see if the candle sustains. I give you the contracts that I loaded, no position yet. And then at 9:37, I took the dip entry long. Here's the contracts, here's my fill price, and I give you my stop loss. Will be a break under the previous day's closing price, which is this green line. So that's on this candle. Now, 2 minutes later, we do get the break below the previous day's close, and I cut the trade. I close it out for a loss, a minimal loss, but I do close it out. I said closed out Amazon short there for an 8% loss. Entry 1.52, now 140. Like I said, I didn't want to see this continue to drop. It's always better to close the position early rather than to hold and hope. So unfortunately, in this scenario, I actually get faked out because what Amazon does is rallies right back up towards the high of day. Now, I was able to capitalize on this because I did go back in on the move, and that's the beautiful thing about closing the trade early, is that it's a small loss, it's a minimal loss, it's a paper cut loss, but we can make that loss up very quickly with one good trade later on. So let's walk you through the risk management here. From the entry point that I took, which was probably closer to like the close of this candle, down to the previous day's close, or down to where I closed it, looked like that. So that was the amount of risk that I was assuming on that trade versus the amount of potential reward, which was the entry point up to nearly the high of day. So my reward on this trade looks like this. The amount of risk that I assume looks like that, right? If we just match this with this move and then match this with the move down where I cut the trade, you can see the reward amount versus the risk amount. This is how I like to take my entries at a price point where the stock must make a directional decision. Either I'm going to be green right away and this trade is going to work for me right away and I'm going to profit, or it doesn't. And when it doesn't work for me, I've just learned over time, cut the trade sooner rather than later. Even if it reverses later on, in this instance it did, you can always go back in on the trade. Okay, so we close it out. We took an 8% paper cut loss on Amazon to start the day. Kind of frustrating, but hey, we're going to come back from it, right? So then we said, I was watching Meta here, so there's a couple alerts coming on Meta, but I said Amazon watching for re-entry, and that's at 9:41. So as I see this hold the previous day's close and reclaim 150 again, I said, I'm watching for re-entry, and I'm giving you that alert right here. Now, I didn't want to take the entry again in this same area because it's just consolidating at that time. There's no true higher high or higher low. So there's no direction there. That's why I didn't take that trade again at that time. But 4 minutes later, I remind you, worth watching for a re-entry long. And that's here on this dip as Amazon is dipping back down. So it dips a little bit further. I wound up taking the entry long at the bottom of this candle at 946. So again, just matching the timestamps here. Amazon took re-entry long. I give you the contracts. I give you the fill price. I give you the stop loss. So again, the amount of risk assumed down to the previous day's close looks like that versus the amount of reward up to the high of day looks like that. So your reward amount versus the risk amount, again, just double, right? Small amount of risk, large amount of reward. We get the move up on this dip towards the high of day, and I wound up closing the trade out for about a 20% gain. So 15%. I said you can hold or take profits. I'm just kind of walking you through the trade here, and now up 20% at 185 from our fill price at 155, and I took the profits on Amazon there. So that was the Amazon trades, right? This one trade, this one green trade, where we took the 20% profit was enough to recoup the loss that we took earlier, the 8% loss, and still put us green on the day. That is the power of cutting your trades early. Now, I know that this reversed. I know that we probably could have held through. Hindsight's going to be 20/20. In the moment, in real time, we made the right decision to cut because it wasn't holding the previous day's close. So this is the power. I'm just trying to normalize these paper cut losses. It's okay to take them. Don't be afraid to close your positions out early and get back in if you see that it is actually going in your favor. Or even flip directions, right? Okay, next trade that I took was on SPY. So we had SPY today as a short. We'll go back to the day trade watch list. SPY today was a short idea below $470. We get the opening consolidation just above 470. So it's a gap down day, right? And we know that yesterday was a gap down day as well. That sold off a little bit. So it's a gap down day. We're just looking for lower lows. We're looking for the continuation drop. Here's the hold of 470 at the open. And you do get a slight break below 470 at this time. But what we knew was that there was data. See this volume here? We knew that there was data potentially coming out on the overall market, on SPY. So we held off on taking a short position as this dipped below 470. Plus, if you look at the 5-minute time frame, this candle does dip below, but then look at this bottoming wick. That almost looks like a hammer candle, right? Which is telling you that there's actually buying pressure here. That's not selling pressure. So the long bottoming wick telling you that this is wanting to hold a support. We don't take the entry there. We're staying patient. We're not getting faked out on that. We get the rally up, the pullback, the rally up, and then the sell back off. Now, this serves as your confirmation because what this move does, pay attention here, it fully retraces this pop move into the high of day. So that's confirmation number one. Fully retraces the pop move into high of day. Number two, breaking below the intraday support or the trigger level. Number three, breaking below the low of day. And if you even want to go a step further, look at the 5-minute time frame. This is a full-bodied sell candle right here. Very strong selling pressure, bringing this back down from this pop move up. So all of those things combined let me know that, hey, we want to take SPY short, right? But much like the Amazon trade from earlier, we don't want to chase the move when it's well above or well below the trigger level. So we're going to let this play out, right? I'm not taking the entry short here. We're letting this play out, letting it play out, waiting for the rally back up close to the trigger level. I could have probably gotten a little bit better of an entry if I took it short here. But what I wanted to make sure of was that we were getting some selling. So as this red candle started to form, I said, you know what? Here, let me bring you to the alert room. I said, you know what, this is close enough. I think it might start to reject and give us a low of day move. So let's go short here, but we're going to timestamp it. SPY, still a short trade idea. I'm giving you the contracts. And I tell you, waiting for an entry on a rally to the trigger level at 470, that's going to be the stop loss. And that was at 1012. So that's well before, that's like way over here, right? So we were waiting for this rally for this entire time, just staying patient. And then I'd give you 10:29 a.m. SPY taking short here, give you the contracts, give you the entry price, and I tell you my stop loss. So my entry is actually 1.04. My stop loss is at 1.0. So it's only like a 4 or 5% stop loss there. That's going to be a break over 469.8. So I'm actually at this time not even giving it all the way up to 470. I'm just saying this is either going to work from here or it's not. So my entry short here on this candle, stop loss is going to be 469.8, looking like that. My potential reward is going to be down to the low of day, right? So my potential reward looking like this, my potential risk looking like that, and look at that, right? Double the amount of reward versus the amount of risk that was assumed. We do get the breakdown towards the low of day, and I wound up taking my profits on this trade at about 15%. I probably could have held through, but the low of day is always going to be a potential area of support. And lo and behold, this does, why is that not giving me? This does bounce here at the low of day slightly. So, that would have been somewhat concerning. I just took the profits when they were offered, right? We get the entry here. It's just trade management, the sell off to the low of day, potential support here. I didn't want to see this bounce back up to 470 and give us like a double bottom reversal. So I went ahead and secured what we had. Okay, so back to the alert room. SPY short now up 15%, 1.04 now to 120. Reminding you of the contracts you can hold if you want, but I took the profits there. So review of the trades that I called out today. Amazon 8% loss to start the day. Terrible, right? Nobody wants to take a loss, but it's a paper cut loss. Very small, easily made back up. Amazon 20% gain following that. We went right back in on it. And then SPY 15% gain following that. So 2 out of 3 of the trades that I called out today were wins. And both of those trades that I called out were nearly double, if not double or more, the loss on each trade. So that is proper risk management for you. Go back and watch this video again if you have to. This is really good course quality information. Thank you so much for your time. Press that like button for me if this has helped you out, and subscribe to the YouTube channel if you haven't done so already either. I post pretty good content every now and then. Thank you so much for your time. Cheers, take care, and I will see you tomorrow when we continue the $1,000 account challenge.